Hey everybody, Mike here. Last time we talked about how interest is the number one wealth killer. We kind of explained about how that is. Today we're going to show you in a spreadsheet really quickly why that is the case. The volume of interest matters and not necessarily the interest rate, and how we can get your money working for you in order to pay off that interest. So without further ado, follow me into the spreadsheet and I'll show you how. We're inside the spreadsheet, and we're going to show you very quickly how to use your private family banking policy to pay off your debts. All right, so we're going to start with just this. This is just a list of debts, and you can see the interest rate and the monthly payment associated with each one of those debts. Those debts total, the payments total $1,980 a month, and you can see here that he is paying he's saving $500 a month. That's his monthly savings amount. So we're going to say that's the amount he has available to begin a savings plan that is more of a private family bank. Okay, we're going to redirect that $500. Instead of putting it into a savings account that's doing nothing for him, we're going to put it into a whole life insurance policy that's optimized for private family banking, and we're going to redirect that to get that working for him. Okay, here's the list of debts again with a little bit more information. You can see they're listed in order of the debt amount. Okay, we're not concerned with the interest rates. We're not concerned with the monthly payments. We're concerned about listing them from smallest to largest debt. Okay, and we're going to take care of each one of them that way. You can see his total savings amount or total payment amount right here. Of that, $851 is principal, meaning he's got $1,129 going towards interest. That's well over 50% of the money that he's paying out every month is going towards paying somebody else interest. Let's get that working for him. Okay, we're going to use that $500 a month savings in order to do that. Okay, so what does that look like? Well, this is a 41-year-old male, okay, and we're going to say that this 41-year-old male is going to redirect that $500 a month into a whole life insurance policy. Now, this is optimized again for private family banking, so it's built specifically for his situation. Okay, so you can see that $500 a month or $6,000 a year, and immediately he's got a death benefit of $442,920. Why is that important? Well, if something happens to him in year one, right? Given what he has here, those debts would still be outstanding, right? But in year one, if something happens to him with this private family banking policy, he's got enough of a death benefit for his beneficiary to pay off all of this debt and walk away without anything to pay off. Okay, but let's say he continues to live a healthy life and he continues to contribute that $500 a month. What is that going to look like? Okay, you can see here what this spreadsheet does for us is it breaks down how long it actually takes to pay down each one of his outstanding debts. And here's the big one right here. His home mortgage. He had 315 months left of payments. We're going to cut that down to 160 months using this private family banking policy. And we can put together a complete schedule that shows you how that's done, what shows you when to take out a loan in order to pay off each one of these debts, and then how to redirect that money to paying yourself interest and paying somebody else interest. And here's the other powerful thing we've got here. You can see here his total amount of interest that's being paid to somebody else is $1,129 a month. Okay, over the course of his loans, that's going to come out to $182,770. We're going to cut that down. He's only going to pay $86,000 of interest over the course of half the time, right? So we're significantly reducing his interest burden, and then in addition to that, we're getting that money working towards him as well. And we can specifically design any one of these policies to fit each person's situation. We can take into account your debts, we can take into account your interest payments, we can take into account your savings amount, and we can build one of these that fits your specific situation. All right, so if you like what you saw there in that video, please reach out to us and see what we can do to help you get your money working for you instead of working for somebody else. It's a very powerful tool, and it's one of the first things that we recommend people do when they start one of these private family banking policies is to pay down those debts, stop paying interest to somebody else, and stop making the banks rich. Instead, get that interest working for you instead of working for somebody else. Okay, we can build one of these specifically for each person's situation based on their savings capacity, based on their debts and their interest rates and their payments that they're currently making, and we can help you help yourself and get that money working for you. So please reach out to me. My information's in the show notes down below. Also, please like the video, subscribe to our channel, share this with your friends. Let's get the word out there about this tool that the banks frankly don't want people to know about. They want to keep this a secret from you. We're trying to get the word out. So please like and subscribe and share with your friends, and we'll see you next time.